Hello everyone, Theunis Kruger here. There's so many webinars these days. It feels like I'm saying this every now and then. Welcome to this webinar, Understanding Orders in MT4. I'm going to keep it really practical. We're going to look at how to enter orders, but before, as always, before we start, I just want to make sure you guys can see me and you can hear me. You can see me and you can see my screen as well. That's very important. One of the previous webinars, the setting for the screen was accidentally not on, so I only realized that after a while. So if you can see my screen and you can see me, you can hear me, then just please type yes. Ali says we can see you. Just one person more, just to confirm. Excellent. Ali and Mustafa, thank you very much for confirming. So now we can continue. Right. Today I want to be, as always, I'm just going to have a short introduction because there's always people that that have not, or that hasn't listened before, also have some questions. So, and then as soon as possible, I'm going to proceed to demonstrating. We're going to just quickly look at what the different orders are, and then how do we apply them? What do they mean? How do we apply them on a chart live? So that you guys can refer back to this if need be and practice yourselves. It's very, very important. I call this the language of the market, online trading. And any language is good to listen to other people, that's fine. But at some stage you must start practicing yourself. Practical, taking calculated risks. That's why I prefer starting in a demo. If you don't know what you're doing, then keep the risk very, very low. We know we're going to make mistakes, but we make it on a demo so it doesn't hurt our account, right? Until we can prove to ourselves we are proficient. And that's quickly the next step. When I talk about proficient, when I talk about I can do this thing, I've got the skill, I understand what the structure of the market means. I know how to take a calculated risk. I can manage that risk, and I've practiced it over and over and over. So there's muscle memory. So there's no emotions anymore. Or not no emotions, but not too much emotions that it interferes with your trades. That's what I mean when I talk about the foundation of online trading. The structure of the market and getting one or two indicators to help us to identify an early stage of a next trend. That's what I mean with method. Money management, risk management, that's how we manage our profits. Calculated risk, how much do I risk of my account? That's money management and risk management. And mind is the most important part. That's where we practice over and over until we can do this thing, until we can flawlessly execute whatever simple and well-defined method we have combined with our money management. Now risk management, right? Now very quickly, I know for some people this is new. Every time I've had some comments that every time there's new people, so they're not sure what I'm speaking about. So always just try to get them on the right track. So if you go to your my FXTM, you log on to your my FXTM profile. This is in your own time, just a quick way of getting to know what I mean with all the terms that I'm talking here. Foundation, structure of the of the market, all those things. Right, if you log on, you go to education, and you go to webinars. This is one of the very handy tools that we have. There's upcoming webinars, but then there's recorded webinars. All right, now if you go to, I'm just going to search to save some time. There's a lot of resources there for you guys. Foundation. That's the second part. Yes, that's the first part. The foundation of online trading. Go look at that, then you're gonna understand what I mean with the foundation of the market, the structure of the market. What do we look at? Why do I start the guys off with just a line chart with no indicators, so we can see the structure? Very, very important. And then we add some indicators, the candles and so on, to see the emotions of the market, right? And then we want to know where to enter, where to put our stop loss, and then we manage that. So what we're going to focus on today is actually that orders, right? So there's a few different orders, and again, I want to make this as practical as possible. So I'm going to log out here, and we go to the website quickly. If you don't know what the different orders is, you're going to learn. I'm going to tell you the terms, but you must go and check. Repetition is the mother of learning. That's how we learn. You must, if you listen to somebody, then the retention is not so high. They call it a cone of learning. If you listen to somebody, you retain 10 or 20% of what you learn. But if you get actively involved, what is an immediate order? What is a market order? What is a limit order? What is a stop order? And you look for yourself, you're involved, then your retention, your learning curve goes up dramatically, right? So let's see, we're looking at different orders. So let's quickly go to the order. So you need to get yourself, you need to get familiar with how to use this. This is where I've just gone. Sorry, I went there very fast. So what I've gone to now is the glossary. That is where if you've got terms that you're not sure of, then you can go and look at the different terms, right? So I was looking there for orders, and I can't see any orders here. Let's go and look. There's immediate orders. Let's go and look if we find that one. Intermediate, let's see. Immediate orders. Intermediate, sometimes you rush over it. Right, let's look at the market order. Market execution. It's a different order, right? So that is an order that will be filled at the next available price, right? The idea of this is to help you guys to get it for yourself, to go and search around. That's how we learn, right? So this is one way of getting to know what the different terms mean. There's lots and lots of them here, right? Let's continue back to our before we go, before I forget, I also want to show you the if you go to the short Forex educational videos, that's a supplementary to our glossary. That's more advanced, so it gives you more understanding. What is a pip? What is the different things? Let's see if we can find anything about orders here. What is a swap? Bid ask. What is a sell stop? Here's going to be some of the answers. So you're going to listen to me today, but then you can, if you're not sure, and go and listen to this again. So if you click on one of these, this is the limit orders, this is the stop orders, the sell stop, the buy stop, limit, just more information, right? So if you click on one of these, if you want to just repeat, you can't remember what did I mean with the limit order, then you go here and you can listen in the first place, and you can also read. That's a very important part of learning, getting different perspectives, different ways of getting the information in your head. When you learn anything new, you go through the mastery process, you try, you find out new things, and then you learn, you ask questions, you get answers, you discuss it, and then you grow. And then physically in your brain, structures are built, neurological structures. That's the way we were designed. Neurons and dendrites is structures that form in your brain. That's part of the learning process. That's memories, short-term, long-term memories. That's how you remember stuff if you repeat it. All right, so it's very, very important. All right, let's go back to our presentation. So what type of orders are there? Right, to show you, and then I'm gonna, like I said, it's practical, so I'm gonna jump between the MetaTrader. So if you want to open a new order, there's a couple of ways. I'm going to show you in the practical. I'm going to show you two ways. There's a longer way and a shorter way, and each one of them has got their advantages and disadvantages, right? The normal long way is you simply go to new orders, and then you will see this is a ECN account. So the type of order I have here is a market execution, right? So a market execution means that the price will be filled at the next available price. So that means that if your order is put through, and you, let's say for instance, you want to enter at 0875, but there's no buyers there. There's no somebody opposite, to take the opposite position, and they can only find somebody at 1,875 or 4 even. Then that is where you'll be filled, right? If this was a standard account, then this would have been an immediate execution. That means it's immediately filled, and if the price changed in the meantime, then it'll ask you for a requote, and you can decide if you want to enter. That's the big difference. Both of them, you basically immediately get into market, but the market execution, or the market execution, they don't get back to you. You don't get an option to choose. It just gets executed. And that might mean you get some slippage. There's a difference between where you buy and where you sell. That normally, because these markets are extreme lot of people that's buying and selling. There's a lot of liquidity, so your slippage is not normally very high, except if you're trading on the short terms on the news, especially in news events. Then there might be a difference of a couple of pips, between where you wanted to enter, because the market is moving so fast. If you are having an immediate execution, that would be with a standard account, a Sense account, and our our shares account. Then if they can't execute that at the price that you want, then they will ask you for a requote. I can actually, let me just do this quickly. So this is what I'm talking about. So the difference, there might be a difference. I'm quickly going to log into my standard account to show you. Let's go there. There's a standard account. So if I now go there and I immediately want to get into the market, then it's an instant account for instant execution. And there you'll see it gives you an option, the maximum deviation from the quoted price. So if there's, in this case, I haven't selected that. So if there's any deviation, if that price cannot instantly be executed, then it'll give me an option and say, sorry, this is the next price. Do you accept it? If I accept it, they try again, right? So this is both market execution and instant execution. The purpose of them is to get into the market as soon as possible. So the guys that have trained with me will know what I do with this. This is what I call just a line chart, teaching the guys the structure of the market. She's teaching them to see the uptrends and the downtrends, to identify the uptrends and the downtrends. That is what we're actually busy trading. That's what I call the language of the market, right? And then obviously fundamental or technical analysis is the proper definition is we look at these charts and we try to identify the early stage of an next trend, right? So what I'm just going to quickly illustrate for you is if, for instance, your method involves that you have to wait for the candle to close, right? For instance, let's say you decided this was a good place to enter, or this is a good place to look for a trade, an early stage of a next trend. That's always a good place, simply for if you look in business purposes, the risk, because it's an early stage of a next trend, a possible next trend, we never know. That's why we take a calculated risk. Then it means the risk you're taking here is small compared to the potential profit you can make over a series of trades. Very, very, very important, over a series of trades. So we are never, when you become a seasoned trader, a successful trader, it means you are making your purpose of your objective, your goal is to make a net profit over a series of trades. The outcome of each and every trade is not so important, because if you have a good method, simple and well defined, you're taking a calculated risk and you're managing that risk, then it means that over a series of trades, it becomes quite possible to make a net profit. The outcome of each and every trade, that's difficult. That is impossible to predict, because we don't know what's going to happen. Right? That's a thing. That's a deep thing that one has to work through. Right? So let's say we are working, we are waiting, and we want to enter. We see this early stage of the next trend, and our method says that we have to wait for a candle to close. Right? So we wait for the market. It makes a lower top there, so it goes down, or it goes up again, makes a lower top here. That means the uptrend structure has definitely been broken. And now let's say our method says that when we get a bearish candle, a candle that closes down, then we enter after that bearish candle. Right, that means that when that candle has closed, all the prerequisites, all the things you had to look at in your method um, has been fulfilled, and now you immediately want to get into the market. So what you would do is you would the first way is just open immediately so here and say, okay, keep it on instant execution, decide the amount of lots you want to go in with, and when you sell, when you press sell, in this case sell, then immediately a trade is opened. All right, so let's go back to the right hand side of the chart. Let's put in a order. Right, let's say your method prescribed, this is interesting scenario here. We can see there was a downtrend, there was an uptrend, and there was a downtrend. So this is in fact a very good place to enter. This is a downtrend there. The structure, lower tops, lower bottoms, was upset, and if the price continues there, then obviously that is a higher bottom there. Right, let's say our method specified. I'm not talking about methods today. I'm just talking about the orders. So let's say our method specified that if the market starts going up after that possible higher bottom, then if it starts going up, then we wait for a candle to close and we enter. Then we wanted to enter there. Then what we would do, there's two ways. Go to a new order, decide how much we want to take. I'm just taking this, the least one now, and there's this way, this longer way of entering allows you to put comments. That's one of the advantages of the longer way of entering. It allows you to put some comments, and then obviously put in your stop loss and your take profit and everything. And when you press buy, then immediately a buy position is opened. Right. So, and when that buy position is opened, then you can obviously how you decide you're going to manage your risk. A good place to put your stop loss, you just click and hold and drag for that single trade. If you drag it down to the opposite side, then you'll see immediately MetaTrader knows that you want to place a stop loss because it's below the price. You drag it and you leave it, and then the stop loss has been put into place. Right, for a take profit, but this is a full take profit. Right, this is not a partial take profit. This is a full take profit. Everything, if you click and hold and you drag up, then MetaTrader knows that this is what's programmed to know that you want to take profit, and that's where your take profit. You can drag it anywhere you want, depending on what money management you use. We normally use either a 1-to-1 risk-reward ratio or the Fibonacci guidelines. Fibonacci guidelines would be in this case something like this, but with Fibonacci we take partial profits. Right, so this is a little bit different. I can show you a little bit later how to do that with one of the ones as well. So what you've seen here is the execution of either an instant execution or a market order. We're in the standard account, so in this case it's an instant execution. But bottom line is I want to enter there, I put in the order, and the order is entered. Right, this was a long way. You click on that new order and you can set your things there. The short way is a shortcut is if you go to this shortcut, this quick menu here in the corner, and you press put in the what do you call it? I'm just going to close this order. Right, there's a couple of ways to close any order. I had some comments before one of my or after one of my webinars of the guy saying I show them how to put it in, but I don't tell them how to take it out. Right, now normally I would leave this and the market would either take me out here or it would take my stop loss or my take profit, except if the structure of the market changes, then I'd move my stop loss. But in this case, what I want to do is I want to take this trade out because I want to illustrate the other way of for you guys of entering. So in that case, what I do is I have two options. I go onto my line here, it's a green dotted line, and when I Okay, you see that that horizontal line is interfering now, so I'm just deleting it. If I go onto my line here, I right click, then it gives me an option of modification, of modifying, and that's how actually you take partial profit. But what I'm illustrating now is how to close. So I close there. If I click there, then it closes. The other way is if I go to my my terminal. I get to my terminal in two ways. I can click on the shortcut here, or I can click Control T as you see there, or I can actually go to View Terminal. So if my terminal opens, then there's our open trade. And if I want to close it, I can click there. So I've got a choice. Either right click on my green line there, my open order line there, and close, or I can close on this side. Right. So I'm going to close that order. So now it's closed. Please make sure if you have been playing around, testing and so on, then make sure that the orders, you don't let open orders lie around and forget them. Okay. If you're busy seriously testing, it can really mess up your testing, trying to prove to yourself or proving to yourself that you can make a net profit over a series of trades. Right. So that was the instant execution or the immediate execution. And the market order, they both work the same way. Right, we've got a nice setup here, so I'm going to demonstrate the limit orders to you now, or no, sorry, the stop orders to you now. Right, so what is a stop order? Let's go to our presentation. Just this confirmation. This is where you open the orders the long way. Short way would be in that shortcut there, where you get a small menu that pops up. Right, the immediate and instant executions we've already discussed. So that's how you get into a trade immediately. You want to enter now. Right, choose there instant. Obviously, that is also a standard account. If it was an ECN account, it's just got to do with the difference between standard and ECN accounts. It's the liquidity providers. It's different liquidity providers. Right. So and it would have been market execution there. Right. Now you've got stop and limit orders. The way to get to them, let's demonstrate quickly before I go on. Limit orders, there's a long way to get to the limit and the stop orders. Again, you press the new order there. You can set whatever you want there. And then instead of the instant execution, we are going to set it to pending order. Pending orders, you will see, takes you to a different class of orders. Now there's two different classes. You get limit orders, buy and sell limit, and buy and stop orders. All right. So what is the difference between the two? There's quite a big difference between the two. So that's why I'm going to just go back to my presentation and just illustrate for you so you can understand. Now, please be patient with yourself. If this is totally new to you, you're going to have to repeat it a couple of times before you understand. That's why I'm going to go to the presentation now, so I can show, or we can discuss exactly what happens. What is the reasoning behind it? All right, so that's exactly what we did. Just repetition of how we find that. We normally there would be the instant or the market execution, and then we just click on that and click pending orders. Pending orders is the ones that we are going to discuss now. Right. So let's look at a buy stop order first. Right. Now, the immediate difference between the pending orders and the immediate orders is we're not immediately going to get into position now. We are waiting. We're almost like setting a trap for the market. We're waiting for the market to reach a certain point, and then we will enter. That is very, very important to understand. A market order, immediately we're in. Depending on the method you use, it's not wrong or right, just depends on the method you use. And when you've got a method, please don't test that, or please test that method over a series of trades, at least 20 trades. One of the traps that newbies or guys that are new to the market fall in is they think, a good method is the thing that's important. They don't understand the structure yet, and then they choose some kind of a method, and it might be a very good method, simple and well defined, and then they take 1 or 2 or 3 or 5 trades, and if the moment they have 1 or 2 losses, they think, oh no, this is stupid, this is a foolish method, and they go and look for a different method. Right. you have to at least test a method over 20 trades to get an idea of what is the net profit or what is the result of that method, right? Because any method is not going to allow you to predict the market. It just gives you a simple and well-defined way, almost like a recipe uh, of where to look for places to enter the market. But it's over a series of trades that it becomes valuable. One or two or three trades is not going to make a difference. Right, it's over a series of trades that we want a net profit. If you don't understand that, then there where I explained to you about the foundation, the recorded webinars. There's also webinars there. I think there's 2 or 3 of them, building a trader's mindset. That is discussing how traders think. Traders are not successful. Traders are not trying to predict the market. They listen to the market. The market gives them places where the odds are there in favor over a series of trades. That if they consistently take that risk, then over a series of trades, the odds are in their favor. The risk they take is small compared to the potential profit they make or they can make. And then it becomes possible to make a net profit over a series of trades. Sorry, I just popped that in there. Okay, before, that's a good idea. I'm going to look at a couple of questions before I go into the orders. Let's see if there's questions about the immediate orders. Right. Yes, Farai asks, can we ask questions? Yes, you can ask questions anytime, and then I'll look now and then and try to answer your questions. So he answered, we asked, how does instant execution work with a stop loss and a take profit? With any order that you open, that you have the ability to place stop losses, a stop loss, and a take profit. That's very, very important because especially when you understand the structure of the market, uptrends and downtrends, when you see an early stage of a next uptrend, you only want to stay in that trade as long as it's an uptrend. If the structure changes, if it's not an uptrend anymore, then you want to get out. You want to protect your account. So in that case, what you would do is you put a stop loss, just like I explained to you, and when the market hits your, or when the price hits your stop loss, you get taken out of the trade. You protect your account. Very, very important principle. And there's nothing wrong with it. It's like paying the overheads. If you've got a business, your rent, your suppliers that you pay, the personnel, the salaries you pay, it's part of our overheads. We take a calculated risk. If the structure changes, then we get out. That is the overheads of our business. If the price goes in your favor, then how do you manage the risk? You need to take profit at some stage. Some methods say you wait until the market structure changes and take all your profit then. I like personally the high probability money management and risk management, where you take a partial profit when the market has moved in your direction for a little bit. That makes the mental stress lower and the risk of that specific trade lower. So, right. So I hope that answers your question. Right, you put a stop loss and a take profit with every trade. Okay, so I don't know precisely. Radman says that, yeah, okay, how do we, yes, you put the take profit and you can use it, it works. With any order, even the stop orders, you can place, I'll show you how you can place you can place a stop loss and a take profit. Right. If you put money in, yes, sometimes there's you're just asking if you deposit money, you get a sort of like a bonus. That is it's extra capital that the broker actually gives you. So it just makes it possible for you, to the percentages you trade with, to make it give you some more to trade with, right? Especially if you trade with smaller percentage of your account, then you need a lot of capital. So that's a nice way to boost your capital. Just a tip: if you're starting with a small amount, like let's say $100, $200, then the lot sizes, if you work out, especially if you trade on the 1 hour, 2 hours, 3 hours, or the 4 hours, the 1 hour, 30 minutes, and so on, then you're going to trade. Unfortunately, because it's not enough, you're going to trade with quite large percentages of your account. So then it's better to open a cents account, because with $100 you get 10,000 cents. Then the lot sizes you're going to work out, you can trade with smaller percentages of your account, and that is advisable. If you get one or two losing trades, you don't want to wipe your account or get seriously hurt in the sense of how much you lose in your account. Right. So let's see another one here. Partial profit. Yes, partial profit is definitely available, and you can. I'll show you how to do that with the next trade we take. Okay. Let's just see. Seems that's all. Right. Let's continue. Right, guys. So now we're talking about we've got immediate orders. I've shown you how that works. Now we're gonna look at buy stop orders. Right. So what is a buy stop order? Let's say the price has been going up, and we are expecting the price to continue up. Now the market is retracing. The market moves in waves. The structure of this is higher tops, higher bottoms. A higher top, a higher bottom, higher top, higher bottom, higher top. So if our method says like when the market starts moving up again, we will want to take an order there because it's definitely an early stage of an next trend. It's just this by the way of explaining, but you get different ways, you get different methods, right? So if we want to enter, if the market continues past that point, then it means it's going to make another higher top there, and we want to enter. So how do we enter? We can't enter with the immediate order because then we're going to immediately be here and the market might change. We want the market to confirm to us that it's indeed going to make a higher top there. So what we do is we place a buy stop order there. That means the order lies there, it's waiting, hasn't been engaged yet. It only becomes a market order when that line is touched. There we place the buy stop order. Right, then that becomes a market order and we are engaged, we're in the trade. So it's like a trap almost that we set. Right. And then obviously there we need to start managing our profit there, where we're going to take profit and so forth. Now a sell stop is exactly the opposite. So the price is going down. This is a downtrend, lower top, lower bottom, lower top, lower bottom, lower top. The market starts pulling back, right? If the market continues past that point, then we want to take a calculated risk there, meaning that we place a stop order there, and only when the price touches there, then it becomes a market order and we've got an open order. It's very, very important. So that is the reason or the purpose of the stop order. So let's quickly go and see how we can apply that. We've got almost a perfect setup here. What we've got is the market started made a higher top, it made a higher bottom, and it's going up. So with the stop order, instead of entering immediately, what we want to do is we want to enter only when the market goes past that point, right? That might happen overnight, we don't know. So we don't have to sit in front of our computers. We can put a stop order in, a buy stop in this case, and then when that becomes when the market gets there, then we're gonna have an open order. So there's two ways. Again, I'm going to demonstrate. The longer way is we put in our lot size. I'm not going to put any comments in here. So, and now we're going to use a pending order. We're going to use not a buy limit, but a buy stop, because we want to enter a buy position there. Now, what's nice here is we can put our stop loss. We can put our take profit already. We can put it in now if you want. We can also put it in a little bit later. Normally, if I see the price is very close, then I just place the order like this, and I just what do I want to enter now? This is the pending order. It's a buy stop. It's above it. 0 USD. Oh, sorry. I have to put the current price there. That makes sense. Eh? Okay, let's see. That's the current price. Obviously, I want it there at 1 point. I can see there what the price is. Why I want to enter this. If this is a market order, then obviously immediately it would have been placed, but I have to tell it where, where it wants to, where it needs to be placed. So it's 09243, and I get that from that horizontal line. And when I place it now, then the order is placed, right? So there's a buy stop 0.1 if the market gets there. So what if I now want to modify? I want to put my stop losses and so on in, right? And my take profits. So I can not drag, unfortunately. I have to go back here, and what I do is I've got two ways. I can right click on my on the line here on the chart and say modify, and I get to that window. But I can also go to my terminal, and I can right click here and again say modify, right? And then it takes me to my where I can modify. So I'll quickly put this in, and then I can also show you where to take partial profit. We'll do that quickly after this. Right, so where do I want my stop loss? There I can see it is 1.08, 1.08339. That's what I want my stop loss, and let's say I want my take profit at 10858, 1.10858. And if I put modify, then they're both placed there, right? So I just want to, there's a horizontal line lying there as well. I just want to get that out of the way so that you can see this is a beautiful green dotted line there. And there's my take profit. It says take profit, and there it says stop loss. All right, so that's how it's put. So again, when I want to get rid of this, I'm using this as an example. If, for instance, the market now doesn't go up, it goes up to there, and then it starts going down, then I don't want that order in anymore. So how do I get rid of it? Two options again. I can right click here, say delete, or I can just delete it on my terminal. Right, so I'm going to delete this one. Right, so what I now demonstrated is a stop order. So we are waiting for the market to reach it, right? So the market is below the buy at this stage, and we want to buy when it reaches up, and it's going to be a buy order. So the stop order is below. When you want to buy stop, the price is below. When you want to sell stop, it's the opposite. Then the price would be above the sell, obviously, and it's going to the sell and going on. Right, let's just quickly look at where would we have put a sell order. There's where we have put a sell order. Let's say, for instance, you wanted to enter there. I can't unfortunately do it live now because the price is there. So there's no proper sell order there. But if I wanted to place a sell order, for instance, since the market went down, went up, and now it's going down, while it's going down, I place my sell order. Then I could still, I've entered here and just change this. And then I simply go to the sell stop, right? And then also place in where you want it and so on. So exactly this opposite of what I just explained. Right. I promise you guys I'll quickly show you how to do the partial profit. So what I'm going to do is I'm just going to open a, this is only one off. This is a long way to enter the stops. Right, let's quickly do the short way of entering the stops. Again, my entry is there, and my stop loss would be there according to the market structure. Right, the long way is there. The short way is I go to this place. I activate my shortcut, so it's called one click. This menu here, I choose what I want to do, and in this case, 0.01 is fine. And when I've changed it here, what's very nice about this menu here, the moment it's changed here, then if I right click, then there's a couple of menus here that's already been pre-populated with what you put in here. So if I change that to 0.02, that's going to be 0.2. Now you see there's depending on where your cursor is, it's going to be a sell available, a sell limit, and or this is the one we're interested in. There's our buy stop. Right, now just very important, this is a shortcut, so you have to practice it a few times. Where your cursor is at the moment when you do that right click is very, very important, because that is where order is going to be placed. And in this case, it's not the long version, so you're not going to be able to change anything. The order is immediately set, right? And then when it's set, I can drag the order to where I want it to be. Remember, we wanted it at that point, and now there's what the order is lying. And now again, now I have time to to either modify here to put in the stop losses and so on, or I can modify on that side and put the stop loss and the take profits and so on in. Right. So that was the long version first, and this was the short version. Just be careful when you do the short version that you don't. For instance, I've had a couple of queries where the guys accidentally put the cursor below the price. Now, if you want to enter a buy stop there, and your price is not above the price, I normally put my cursor where just above where my entry should be. If you put it underneath and you right click and you go there, then you see there's now a buy limit, and then it gives you the option of a sell stop, and there's the buy limit we will discuss now. So this is a shortcut, but now it won't allow you to to put in a buy because your cursor was below the price. So it's just important to remember that it's not a crisis. If you see that, then just click off and go above the price where you want it to be. Right click, and then you'll see there the buy stop appears. So this is the shortcut. Right, let's quickly let's do a trade. I'm just going to remove that trade, delete. Let's do a trade where we take partial profit quickly. Right, I've entered a trade and I'm going to enter immediately. This is this is a shortcut where we enter immediate. I want it immediately now, and then if I click buy there, then immediately I've got an open buy order. Right, but now I want to close half of it. Let's say I've got my take profit somewhere here, and the market reaches it, and I want to manually close. Then it's very easy. I can either right click there and modify. I'll do it now again, and then instead of modifying there, we can change it to instant, and then it allows you to change the volumes. So we don't want to change everything, we only want to change half of it. And when I click close now, then it's going to close half this position. Right, that's the one way where we can select that. Other ways, obviously, here also modify, and just by way of repeating, you go to instant execution, and then not the whole bunch. I don't want to change everything, just partially. I change that to 0.1, and then when I close, you'll see there's only one half left, so the other half we've already closed. Right, so it's just that's a manual way to take partial profit. All right, let's close this one as well. Oh, time flies, it's amazing. Let's go to the limit orders. So we dealt with the stop orders. So what is a limit order? Right, so a limit order is when it's placed below the market price. Now that if you're like me and you're a visual learner, then that doesn't mean a lot. So let's I want to see it demonstrated. Right, so what that means is there's a uptrend, obviously, higher top, higher bottom, higher top, higher bottom, and now the market is retracing, and we are expecting this this uptrend to continue. But we also know that just like there's retracements there, so we want to enter. If your method is based on retracements, then limit orders is what you're going to use. If the price is going up and you see there's a retracement going, and you decide, right, when the market reaches that point for whatever reason, depending on your method, it means there you want to enter into a buy position because you're expecting the market to continue, this trend to continue. Right, so it's very dependent on the type of method you have. So what you do then is you simply go and you place a buy limit order there. It's not been executed yet, it's lying there, meaning that if the price turns around here and continues up, then you will not have a buy order in place. So then the market didn't go to where you wanted it to go, and you haven't got an open order. No profit, no loss. Right, so but if the market continues down, engages you, the moment it engages you, it becomes a market or an instant order, execution order, and then you've got an open position. Now there's two options here. With this, obviously the guy entered here expecting the market to go up. So if the market doesn't go up, you have to have a stop loss somewhere here. If why I say here is this is where the last higher bottom was. So if it goes past here, technically speaking, it's not making higher tops and higher bottoms anymore, and it might start, it might be a ranging market or a downtrend that starts here. So then you might want to get out. That's just one way. But if the market continues then up, then obviously you have to start managing your profit up there depending on your method. All right. So that's what I mean when I say that the order is below the market price. We're waiting for the market to touch it. We are it's a retracement and we're expecting it to go up. And obviously, guys, it's exactly the opposite. All right, I'll just finish here before I do live again. I'll see what the answers and questions are, or the answers are. Sorry, questions are. Right. So in this case, the market is going down. We are expecting it to go down again. Your method says, okay, instead of using market or a stop order, when it continues, you're waiting for a retracement. So when your method, if your method says, right, we need to get engaged here, then you put a sell limit order here. That means when the market reaches that, it's going to become a sell order, and then you either have to protect there if it continues, or you have to manage your profit when it goes in your favor. Right, so let's look at how that is executed. Right, for instance, let's just clear this here. Let's say you're expecting the market to go up now, and the market has continued up, and now the market is coming down. And if the market reaches this point, then you want to get involved, but with a buy. You're expecting this this trend to continue. So the market is now continuing down, and there you want to get involved. You want to buy there. So what would you do? Right. Let's show the two versions again. New order. Just go and change your lot sizes. Unfortunately, a lot of guys wipe their account, they forget to change that, and then it's one lot or whatever, and then they enter, and when they the market goes, they haven't bargained on whatever happens, and then they lose a lot. So just be careful with you must set your volume, how much lot size you want to go in. Right, again, we don't want to enter instantly. We want to use a pending order, and in this case we're going to use a we want to this is an uptrend, so if the market touches there, we're going to up, so we're going to choose a buy limit, and then we're going to put in the 0.1.08571. Right, I'm not going to put my stop loss, my take profit in now. I've already demonstrated that. See how time is going, and what you've got is you've got a buy limit. That means if the market comes down here and it touches there, then it becomes a buy order. And again, I can put in my stop loss and take profit in two ways. Just go and modify either the line, or I can modify here and put in my stop loss and my take profit. All right, so I hope that makes sense. That was a long way to do it. I'm just going to finish here, guys, and I'm going to look at the answer or the questions. So this is the buy stop. Okay, this is a long way. Let's look at the short way again. We pre-populate this shortcut menu of ours, and then immediately we've got access to our short, our whatever's here. So what's happening now is you must just make sure your cursor is above. The moment your cursor is above, then it will. Okay, this is not going to work, it seems, this time. Okay, so when I'm above the price, no, sorry, when I'm below the price, right? I just switched it around. So when I want to put that order, it's got to be below the price. If it's above the price, it's just going to be the opposite. So when I'm going below this price, I go to this point, then it's a buy limit, and I've got a shortcut I can immediately enter. It's also there at that side. So if I press here, immediately it opens a buy limit. I normally go to about the same stage, but where I want to place it. But when it's there, I can just drag it to precisely where I want it to be. Right, and there I've got my buy limit. Obviously, it's the opposite. If I want to enter down, let's just take this out. So if I'm expecting, for instance, if I was expecting the market to go up, it's a downtrend, and I want to enter a sell there, then I would have waited while the market is going down. I would have put my right click there, and then I've got an option of putting my sell limit there. Right. Just make sure, if you get confused like I did now, if I want to place a limit order and it's above, it's not gonna allow you to place a buy limit. You have to be below the price to get the buy limit. So if you see that, just make sure where your cursor was. That's quite important, with the shortcut version, not with the longer version. So that doesn't matter so much, but with the shortcut version, definitely. So I hope I'm helping you guys. So we've run through the most important ones. I'm just going to see if there's any more questions here. I see there's a couple of questions piling up, so let's handle them. Right, partial profit has been done. If I place an order, say example a buy, can I sell partially instead of squaring off a full order? If you've placed an order and it's a buy and it was an immediate order, that Yugesh, if you have got if it's an open order, then you can partially close it the way that I showed you. So you just go to modify and then close it, then change it to to the immediate order, and then change the volume, the lot sizes. If it's a sell or a limit order that's open, then you can also change that. You can either delete it and just re-put it, replace it, or you can let's see if that's possible. Let's open this, and we go and open a buy limit here. Right, let's see if we can close a part of it. No, it's not going to allow us to close because the order is not live yet. So I think the safest way in that sense would be to just, your order is in there, it's just to delete that order and then to place the correct volume of what you're going to put. It's going to get, why I say that is if you put that immediate order, if you execute that, then it's going to open a new position. Right. Right, let's see. I hope that answers your question. Can I sell partially? Can I edit the lines of several orders in terms of color? William, no, the lines unfortunately is set by, if you go to properties, you'll see it's normally set by what is here. So actually, in fact, I don't think you can set it here. So I think it's in the programming. It's red and green. And I know the grid, for example, the grid, if you set the grid, then it impacts things like your centering tool. But the green, there's nothing really bright green here except the bull candle. So that means, unfortunately, not. That is that's preset in the basic programming. Okay. Joseph says, my account is $4. What can I do to revive the account again? Well, there's two things that you can do. Firstly, the reason why it's $4. I would find out what the reason why is, Joseph. So I'd go look at my go look at that foundation webinar of mine. Look at what I mean with the structure of the market. If there's only $4 left, then it means I've been taking trades, that you've not necessarily either you've taken too much of your account with every trade, or you've not been placing it at good places, so you're not obviously making a net profit over a series of trades. So my suggestion would be to go back and to go and practice on a demo again until you can prove to yourself on a demo that you can actually make a net profit over a series of trades, and then you proceed to a live account. Obviously, you've got a Sense account. So if you are ready, if you can prove to yourself on a demo that you can make a net profit over a series of trades, then you can put in, save in the meantime or whatever, put in $6 as well, and then when you've got $10, then that will be 1,000 cents, and then you just start, you keep your lot sizes small, you just continue practicing that skill of yours, that learning or understanding the language of the market, taking calculated risks at the early stage of an next trade and managing it, and so you build up your account. So that would be my best advice. Anybody that's blown their account, I've done it a couple of times when I was still learning, it means something is wrong, guys. You have to stop and retract and check, what am I making? What is wrong? Why am I blowing my accounts? One of the most valuable lessons or valuable things you can do is if you've tried something, is to make that valuable by learning from it. I have a couple of very big traders, and for myself, it also worked like that. When I started reviewing what I did, let's say I trade for a week and I see, it didn't go so well. I had lots of losses. Go back and I review, what did I do each and every trade. Then what happens is you start seeing, and with me, I saw that 80% of my losses was caused by a common mistake. I was entering too late in the market. I was stopping my I was stopping my trades too soon. I was moving my stop losses and so stuff. I didn't understand the structure of the language of the market very well. So that caused me to realize I must stop, and I must find out about the structure. I must get some. I must find a better way of trading than the one I was doing. Right. And you make the mistakes valuable by learning from it, seeing what happens, and then realizing, I'm not going to do that again. I'm not going to move my stop losses again. I'm not going to get involved in the middle of a trend anymore. I'm going to wait for the early stage. I'm not going to take my profits too soon, because I give away over a series of trades a lot of profit if you take your stop, if you take your take profit too soon, and the market actually was generous and wanted to give you more. Right? Those are small tweaks or things that you have to change in order to become profitable over a series of trades. Right, let's see. At price is empty. Please define the volumes versus capital in your account, William. Right, that's an interesting question. What you're actually talking about is lot sizing. Right, so lot sizing, very, very quickly, and I can explain to you. If you're taking a calculated risk, in the beginning, just to start with lot sizing, in the beginning, I don't care how much money you've got, guys. Open a live account, yes, that's fine, but learn to trade first on the old charts and the demo. Practice your method you have. Practice to see the structure of the market. Practice on a demo to execute your trades. You know you're going to make mistakes. Make mistakes on the demo. Prove to yourself that you can make a net profit over a series of trades before you go to your live account. Let it lie there. This is a business. We don't want to get stuck on the demo like a game. But we've got to realize that we will make mistakes, and it's not worth blowing your account or hurting your account before you, while you even know, your skill is not good. Right. So what we do there, lot sizing means that if you are going to take a calculated risk, before I do this, sorry, while you're practicing, please, guys, keep your lot sizes as small as possible. If you're taking partial profit, keep it to the smallest size you can, so that you get used to this fact of, okay, there's no pressure there. I'm learning to execute. I'm learning to execute, how to do my method, how to consistently do it over a series of trades. Only when you can prove that to yourself do we go to lot sizing. That's actually step 3, right? And lot sizing, it means that, for instance, let's say I'm going to use this as an example. If I want to enter there with a buy stop, if the market goes past there, then, and I want to get out if the market is there, lot sizing means is, firstly, I need to know how many pips. What's the difference between where my entries and my stop loss? In this case, it's about, let's make it 95 pips, right? So 95 pips, that's the amount of pips from my entry to my stop loss, right? But that doesn't help me. How many lots do I need to enter there? How much am I going to risk there? Let's say, for instance, I've got a $100 account, and I'm going to go to our website now, This is a very handy shortcut, guys, or a very handy way to learn how to do lot sizing. If you go to your trading instruments, trading platforms, your tools, your trading platforms, your tools overview, click on the overview part, not on the individual ones, and you go down, you're going to see there is a pip calculator. Right, that pip calculator is something we're going to use. Right, so our use that is the following. We know what the pip amount is, what our risk is going to be. That's 95. What is the currency pair there? It's Euro USD. So we change that. It's already to USD. All right. Now, if I've got, let's say, $1,000 account, and I want to risk 1%, right? That is what is 1%? That is $10. Right. So how many lots do I need to open, or to open the trade with in my position to only risk 1% or $10 of my account? Right. So what is it going to be? If I risk one lot size, then that is going to be the amount. Let me just change this to Euro USD. Most guys trade in Euro USD, they deposit currencies. So that's not what I want. That's almost my whole account. So now I can take 0.1 and I can see that's 95 closer, right? But it's not 10 yet. So this is a manual way which you can get used to this. There is indicators that you get that you can do this automatically, but I suggest learning with the manual way so you don't make what we call zero mistakes. Zero mistakes is sometimes you're in a hurry and you just place your indicator and you go, and you didn't see there was a digit wrong. So in the sense of you either risking one digit, 10 too much, or 10 less than you wanted to actually risk. So that's not nice. So with this, you get it's also quick to do, but you get a feel for, for the lot sizes based on your account. So obviously we want $10. So let's go to 0.1. That is almost, that means that, okay, 0.1, right. So in that case, that is what you want. That is the amount of the lot size you want. So it's very small. You can see if you trade with 1%, with even $1,000, and you're trading on the higher time frames, the 4 hours, and the pips, the structural changes are wide, then it's not going to work, right? So you need to either trade in a lower time frame where these pip sizes are less. If this was, for instance, 50, then obviously it's going to change, right? So then you can actually trade with 0.04 if you were risking, if you were 0.02 if you're risking 1% of your account. So that's just important to know. So I did discuss this on another webinar as well. If you have issues, please contact me. But I think I've done enough just to give you guys an idea. Right, let's see if we can sort out a couple of more questions. My time is basically up. I'm just going to finish a couple of questions. All right. Mustafa says, I can't place stop orders very close to the current price. Yeah, that's a very good question. Mustafa, what you need to do, especially on the lower time frames, is to go and activate what I've activated there. If you go to your properties, you right click, go to properties, you must activate your ask line, right? What the ask line does, it's going to show you on your chart the full spread. Now, some of the currency pairs, the spread is very wide, like the exotics and the miners. And if I want to place a trade there, it's not going to allow me to do it because it's inside the spread. So if I want to place a buy order here, then it's going to have to be above the spread. If I want to trade put in a sell order, it has to be below, the spread, inside the spread. That's normally the reason why it doesn't want to place an order when you are very, very close to the price. All right, that shouldn't be that way with the instant or a market order, but with pending orders, definitely. Don't allow you to place a pending order there inside. Right, let's see. How to place, okay, I've already shown you how to place buy and limit orders. Yes, very important. Mustafa is asking, will pending orders be saved on the broker server or my PC? That's a very, very good question. These orders, the pending orders, the immediate orders, especially the pending orders, they are saved. I mean, all of them are executed and are saved on the server, right, on the broker server. So even if you close your, your computer, you switch your MetaTrader off, close your computer, that orders will be there. Right, that's very important to know. So if I take a position, for instance, and I put my take profits and everything, and I shut my computer down, that take profits, the stop loss, everything stays there on my broker's server. And if the price goes through, I'm going to take my profit. It's going to immediately be taken. Or if I have to protect my account, if the structure changes, then it's done. That is not the case with EAs, where EAs take orders for you. That EA needs to be either on your computer or live. EA is programs that you program to trade for you, or to partially trade for you, to manage a trade for you. If you can't keep your open, your account, your computer open, then you have to rent what we call a VPS, a virtual private server, where you then run a copy of your MetaTrader with your account open, and the EA can do its thing there. The program can do its thing there. So, but these orders that I've explained, they are on the broker's order, or the broker's server, are they? Okay. Unfortunately, you can't download this. What I can do, some guys are asking if they can see this again. This is recorded with GoToWebinar. I'm just going to quickly go to my presentation again, and let's go to the last part. Yeah. There's my email. What I can do is I can send you a link. So I can send you, if you email me and you ask, for you want to watch this recorded webinar again. Not all these webinars is unfortunately placed on our website, but they are, at least for 6 months or so, they are kept, they're saved on the Go webinar, and that's a link that I can give to you then, so you can go and watch it at your own time. Right. Broker server, I see there's, let's say, how many questions are left. Yes, there's a couple of good questions. I've got a couple of minutes, 5 more minutes. Right. So I've answered that one. Books. What strategy do I use? Guys, I simply look at the structure of the market. I don't have any indicators really anymore for myself. I look at the uptrends, the downtrends, and when there's an uptrend and the structure changes, it starts making lower tops and lower bottoms, then I simply they simply take it's the early stage of a new downtrend. Then I take a calculated risk there. What I do teach people in the beginning, it's difficult because you don't see the structure yet. You need some assistance. You haven't got confidence yet. So what I do teach then is the moving average spring strategy, which is just designed with 4 indicators, not too much clutter, just to help you identify the early stage of the next trend, how to identify pullbacks, turning points in the market, and so on, and where to put your stop loss, so you don't have to worry about it. The purpose of that is not that the method's going to make you rich. The purpose is to help you to gain confidence in your ability to see that structure, to see how easy it gets, guys, to make a net profit over a series of trades. If you listen to the market, if you take your if you wait for that early stages of the next trend, and it can be on any time frame. I know guys that trade successfully from the 1 minute. The 1 month and the week is a bit too long, but from the daily up to the 1 minute, waiting for that early stages of the next trend, taking a calculated risk and managing that risk, it just becomes almost ridiculously easy. If you practice that, and you take a calculated risk, I call it a solid foundation. So that's what I do. I just look at the structure of the market. I don't really use indicators anymore. Books, very, very good question. I don't really, that's just my opinion. So everybody's got his own opinion. My opinion is it's not really worth buying books about methods and theories and indicators and stuff. The only books that I would recommend that made a huge difference to me is books about the psychology, the mental side of trading, like Trading in the Zone. You can email me. I've got a summary that's on the web of the email Trading in the Zone by Mark Douglas, a summary that one of his students made, so that I can email to you so you can just get an idea. But there's a couple of different types of books about the mental side. I know yeah, but that's the one that I don't know, it spoke to me the most. You can Google, just check, you know, the psychological side of trading. How do traders think? That's what I also tried to give you some background in the building a trader's mindset recorded webinar that I've got there. I think there's about 2 or 3 versions where I talk about the different aspects. You can go and listen to that. 80% of trading, I almost want to say 95% of trading is the mental side, is working through this this fear of losing, this fear of being wrong, the fear of you know, missing out, the fear of leaving profit on the table. This is all stuff that I get from that book, Trading in the Zone. And what happens is if you just stick with the structure of the market, then it's really easy over time to just practice until you've got no more fear, because you listen to the market, you take calculated risks, and it's according to the structure. You protect your account when it's, you know, when the structure changes. You stay in the trade when the structure is fine. It just makes it easier, guys, to make a net profit over a series of trades. Right, one more question. That's the pip value calculated in US cents. Right. When you open a cent account, that's a very good question. When you open a cents account, $100 or $10 becomes, you know, 1,000 cents. So if you're going to work out the in the pip calculator, you're still going to use the proper lot sizes. So as far as you are concerned, that cents can actually be dollars, right? You're going to risk the cents, yes, but the way you treat that account, it's like it's normal dollars. So you're going to work out the proper lot sizes as if it's dollars. It is just going to be cents, so it's going to be proportionate to your account. It's going to be, you know, it's going to be a small risk that you take. So if you've, for instance, you put in $10 and it's 1,000 cents in your cents account, and you go to that that calculator, then you're going to say, you know what the pips is. Obviously, let's say it's 50 pips, and the lot sizes is going to be, it's going to show, I think, let's say $200 there, but you can just substitute cent there. So if it's, let me go there and show you quickly. It's a very good question there. So if I've got a cent account and I'm risking, let's say 1,000, it's 50. I want to risk only, you know, 10% of my account. Then that is going to be cents if you've got a cent account. So you can ignore that. So and then you can use 0.02. All right. So so for instance, if it's a lower time frame, and this is for instance 20, and you still want to risk 1% of your 10 cents now. So, and then it is, it's going to be 1% of 10 cents, it's going to be 10, you know, 10 cents. So substitute, that's 10 cents, that's only 4 cents at this stage. So now you can push it up. You can go to 5. Right, that is 10 cents, 1% of your account. So that's a nice thing about the cents account. It's more realistic. So you are actually trading with $10, 1,000 cents, and all this calculations you make, the trading you make, is as if it's, you know, you're simulating almost like as if it's $1,000, but you're trading in cents. And then it's very easy when you build up your account, you get some extra capital, and you go over to a full, you know, full lot size, or to a standard account or the ECN account. Then it's very easy. You're used to this. You've been doing this. You're just going to continue the same, and then it is going to be dollars now because it's $1,000. So so what this cents is concerned, you can, you know, the dollar, you can take it out. If you've got a cents account, then this means actually it's cents that you're risking, 1% of your account. Okay, I hope it makes sense. If it doesn't, please email me. So I'm not perfect, so I just try to explain the best possible, but we're going 4 over, so I'm going to say goodbye now. And thank you for attending, and call me if you want, or email me if you want more answers, and we take it from there. Okay, goodbye guys.